money. We are going to talk about finances. And I'm really, really excited about this because I remember way back when I was here, someone gave me an advice that later I found out wasn't true. He said, if you have a credit card, the best way to use a credit card is when you buy something, even if you have the money to pay or don't pay or pay part and leave some on your credit. And I asked, why would I leave some of my credit if I have money to pay? I was like, oh, that's how you build your credit. And that's how the credit company will know that you are good. And I'm like, okay. But then I didn't think that was right. And so the next day I called my bank and said, I have this advice about how to build credit, but I'm not so sure. Can you advise me or tell me if it's true? And they were like, if you have all the money, you better pay everything up. Don't leave some. Why are you leaving it? And I said that the person that told me that you should leave some said it's good because when I leave money and they put interest on it, that's how come they get their money and that's how come they see that I'm a good client and I build my credit. So today, I know today we brought someone to tell us about finances. And I know that this is very important because just about 2 months ago, I was speaking with a friend and she said, I would have bought a house a long time ago. I had no idea the use of a credit card when I came to Canada. And so when I got the credit card, I just kept buying things and buying things and buying things. And then it has taken me about 5 years to rebuild that credit. And if I had known this early on, I would have built a very good credit and I would have bought a house a long time ago. So it is very important as we decide to move to Canada, or even as we have moved to Canada and we are newly immigrants, we need to understand how the system works. We need to understand how the financial system works. It's different. For most of us, where I'm coming from, there was nothing like a credit card. You have money, you buy your land, you build your house, you have money, you just buy it with cash. But then we moved to a system where you need a credit card. You need to manage your finances. You came with money. How do you do it? How do you go about it? And we are very honored today to have with us someone who has over 20 years experience in the credit world, in the credit space. Is no other than Mr. Kunle Popola. Please, if I didn't say it, go forgive me. I did not mean to murder your name. He's currently the director commercial credit and special loans at Connect First Credit Union. And so we have someone who has so much experience in credit building, over 20 years. Please join us. If you have any questions, as usual, put them in the, if it's live on Facebook, so put them in the comment section on Facebook. We will read it and we will answer your question. If you're here with us, put them in the chat. This is African Connect. We are a non-profit in Calgary. We support immigrants. One of the things that we do is to run these online programs monthly so that immigrants would have some wisdoms to live by, because you can move to a country and sometimes some of us decide to stay away from our community and be on our own. But as you decide to stay away, you still need to know your way around and the wisdom or nuggets. Information is key in this part. The more information you have, the more resources and opportunities that opens up for you. And so I'll hand it over to Kunle Popola. Please say your name again. We are honored to have you today. Thank you so much for joining us.
Thank you very much, Anemwa. And it's a privilege to be with you all today. And it's a very interesting topic that you have asked me to come speak on. Yes, I've been in banking and in the credit space for what some people will regard as a long time, but I can tell you that we all learn on a daily basis when it comes to credit. So it's a very interesting topic and it's something that impacts all of us, in our personal lives and in our business lives. So like my name was said, I'm currently the Director of Commercial Credit and Special Loans at Connect First Credit Union. And basically what I do is twofold. I attend to the credit request of businesses, so we get them approved in my team. And at the same time, I also manage the defaulting members, both on the consumer loan side and on the commercial loan side. So I see the entire spectrum of credit, from granting the credit to recovering the money. And I can say that to an extent, I have an idea of what we look for when we're looking at your credit rating and credit scores. And I also have an idea of what we look for when we decide to come after you to say, you know what, you have to pay us back. So thank you very much. And so if I I'm going to speak about financial health or financial well-being and credits. The first thing I would like to touch on is the credit culture. For most immigrants, the change or the shock we experience when we move into Canada is the fact that we're moving from a cash society to a credit-driven society. And it's a really, really big change. So many of us don't understand what it's all about. And just like Anima said, you know, all sorts of people will come to us and give us advice. Someone just advised her that, you know what, when you buy something with your credit card, just pay cash and that's it. Or no, just leave some balance on your credit card. That's the way the credit card company knows that you have the capacity to pay. That is a myth. That is a myth. Yes, it's very good to have your credit cards. It's very good to have some exposure. It helps you to build your credit. However, when you have the cash, always pay your loans, because on a daily basis, you're making money in the company, either the bank or a non-conventional lending institution. That's where they make their money from. And the truth is, the day you default, that day you are no longer their friends. They will come after you to recover their money. So, as part of my presentation, I'm actually going to touch on, the critical factors that impact our credit scores. But like I said, let me start with the credit culture. So coming from Africa, coming from Nigeria, everything we buy in Nigeria, more often than not, except for the very privileged few who have access to credit, you buy cash down. Typical or an average immigrant is not used to the guiding principles of managing credit. We feel that, if we default, all I have friend or my family, or ignore, just go to my friend's house and just explain and beg, and that's it. But in a regulated credit system, it doesn't work that way. There's laid down guidelines and principles that you have to follow. So there's a very big difference between the cash society and the credit society. Now, talking about the credit society, there are a lot of myths. People come in here and they fall into two major categories. Some say that, no, I'm not going to touch credit. Anything I'm going to buy with my cash. That is also not optimal. Some other people, come in, and because they're not used to credit, the first thing they see is institutions throwing credits in their face. Oh, we can grant you $2,000 credit card. We can grant you $5,000 credit card. And then you have the $2,000 worth of credit card, and then in 6 months, because you've been using it judiciously, they just increase it, send you an email that, we're upping your limit to $5,000, and you accept it. We're increasing it to $10,000, and you accept it. That's fine, as long as you can manage it. It's fine. What that tells you is that every year or every 6 months, when they check your credit rating, they see that, okay, this person is managing the credit properly, and they keep loading you with additional opportunities to load your credit. So they grant you more and more and more, and you keep accepting until you get to a particular threshold. And you can be sure there's no bank that just grants credit without having some form of internal workings. So they have decided that for everybody we're going to grant credit cards, and which is not secured, this is the maximum. So it doesn't matter if you have a credit score of 850. They already know within their systems that this is the maximum credit we can grant to anybody without some form of security. So at some point, you get to that stage where we call the threshold of unsecured credit. So even if you have the maximum credit rating that you can ever have, you're not going to get more than that score, except you now have some other transactions you do with that institution. So coming back again to the credit culture, like I said, some people, they come in here and they have the credit cards and they refuse to use it. It's not optimal. Some people come in and they max their credit card without a plan to repay it. That's the worst place you can find yourself. And that probably was what happened to the example that Anima gave. And the person had to rebuild or, spend the next 5 years trying to repair that credit and pay it off before they can actually access a mortgage. So what am I saying? How do you see credit as an individual? That is the question you need to first and foremost ask yourself when you get into this community, into this country, into this environment. How do I see credit? Do I see credit as a burden, or do I see credit as an advantage? So when you look at it from that perspective, then you will be able to articulate and discipline yourself in a manner that credit becomes a tool for progress. And that is the intent of credit. Bottom line, it's supposed to add value to you, not become a burden to you. So when you look at yourself and you see credit as something that adds value to you, it's easy for you to now plan and say that this is what I want to use credit for. Oh, I just want to go out and have a good time this evening. That's not the intent of credit. If you look at credit, you need to, as much as possible, always see it from the point of view of, okay, if I'm going to use my credit card, or I'm going to access my line of credit, or I'm going to use my authorized overdraft, or I'm going to use my term loan, why am I doing that? Is this particular expenditure adding value to me? One. The second thing is, how am I going to repay this exposure? Those two things are very critical at the point of accessing credit. What am I using it for, and how am I going to repay? Once you're clear in your mind, with the answers to those questions, then you can go ahead and access those credits because you have a plan from day one. Many of us go into credit or into loans, into accessing loans without a clear plan, particularly when we have what we call the revolvers. The revolvers are loans that are revolving. So your credit card is a revolver, your line of credit is a revolver, your overdraft is a revolver, which means if you have a $5,000 overdraft or line of credit, you can max it to $5,000, pay it down, use it again. Sometimes you're only paying interest and things like that. But you need to be careful because those are the types of exposures that in bits and pieces you ramp up until you get to a point where we call what we call the locked-in portion. So for example, you have a $5,000 line of credit or overdraft or credit card. And then you start by saying, oh, I can afford it. If whatever is used, I'll pay it off at the end of the month. You start with $200, you spend that and you pay it off, you spend it and you pay it off. And then somehow there is an unexpected expense or something that is outside of your regular expenditure profile. You use your credit card. So from the $200, all of a sudden, you are at a balance of $1,200. Maybe you buy a ticket to go on vacation. All of a sudden, you have that. Your monthly cash flow can only pay off $200 in monthly repayments. So when you are using your credit cards for groceries, it's easy for you to use it to buy groceries and pay it off. Buy groceries and pay it off. Now you've loaded it with additional $1,000, charging you interest at 19%, which is the average you see most credit cards sit at. Some are in the 20%, 21%, 24% range. If you have a very good relationship with your financial institution, you can actually get credit cards that are much lower, 9%, 10%, 11%. But many of us don't even know, and we don't even check. What interest am I being charged? What other types of credit cards are available? So you have $1,200 balance on your credit card at this point. Interest on that $1,200 at the end of the month comes to $60. All of a sudden, your $200 that you have to service your credit card has reduced to $140 because $60 goes to interest. And then all of a sudden, it begins to ramp up. And then 1 year, 2 years, 3 years down the line, you find that out of the $5,000, you actually have $1,000. You have a $5,000 credit. You've used it up to $1,500, but out of the $1,500 balance that you have on that account, what you have that is locked in is $1,000 that you don't know how to pay back because your cash flow cannot pay it back. So you're waiting for a windfall someday. So that portion is locked in, and every day you find that your balance, when you pull your credit score, what you find is that you're permanently at 30% utilization of your credit. Some people, you go like that, and then maybe subsequently something else happens. You load another $1,000, then your balance goes to 2,500, 2,000 locked in. At some point, you find that the only thing you are able to pay at the end of the month is the interest on that credit card. You are no longer able to service the principal. So that particular credit card becomes locked in. And then you're struggling, you're going around to look for, okay, how do I get out of this? I'll talk about that in a short while. But before I go into the details of credit cards or line of credit, let me just continue with the credit culture mentality. So, is it good to have credit? Yes. But you must know what you want to use it for. What we call, when we say life happens, that's the reason why you need some form of emergency fund, either in savings or in your ability to access credit. When life happens, things happen that outside of your normal cash flow, you need an emergency fund. So that will come from either your savings or from your ability to access credit. And that is why credit can be important. You also have times when you need to go into some some capital expenditure. You want to buy a house, $400,000, $500,000. I can tell you that in this environment, because Canada is a credit-driven society, if you come with cash to buy a house, CRA will definitely be on your case. Definitely. So it's just the way it works. They want to be sure, they want to find out where you got the money from. They want to be sure that you are even paying your taxes. So, and because it's not common that you want to buy a house and you just cut a check for $500,000, $600,000, $300,000. No, those types of cash don't just sit idle, because it also shows that you are not managing your funds properly if you have cash sitting idle. So credit is good, but you just have to be disciplined enough to manage it. The other thing I would like to touch on is, I think I've talked about why we need to be exposed to credit and all of that. So the next thing I want to talk about is your credit rating. People ask a lot of questions and they say, what impacts your credit rating? What is credit rating? Sometimes you're talking to some people or some bankers and then they throw in jargons. Oh, yeah, your FICO ratings. And then you're asking, what is FICO rating? What is Beacon score? You wonder. The simple explanation is all of these terminologies is just your credit rating. It's the way the lenders view you, bottom line. And research has shown that on the average, an average Canadian sits in the 650 points credit rating space. That's on the average. When you hit the 720 points credit rating score, you're among the 75% thereabouts, top 75%. The highest you can have is 850, 850 or 900, depending on who is doing the scoring. So that is the score that lenders use to determine how credible you are. If we give this person money, is he going to be able to repay us? So when you walk into a bank and you want a personal loan, they go and check your credit score. Even if you are a business, you walk into a bank and you say that I need money to do this particular project. There is a way that we also rate businesses or enterprises. It's different from the beacon score that you see on the consumer side, but it's technically the same. You measure the ability of this person to repay your loan. So, what are the things that impact your credit score? If you tie this back to what I mentioned about credit culture and the need to always have access to credit. So it's nice to have a strong credit score so that if there's a need for you to even access credit, you can access it. So if that is the case, then you always have to make sure that your credit score is top notch as much as possible. So what are the things that impact your credit score? Like I said, the average, Canadian is in the 650 range. Excellent is between 740, thereabout to 900. Your credit score is excellent. Between the 660 and the 730, 739, you're very good credit score, you're top 75% of Canadian. So that's where you want to be. Once your credit score starts going below 650, there's problem. You are treading on the verge of insolvency. Because what that means is if there's an emergency, your ability to access credit to sort that emergency out becomes limited. And then what that does to you is that it throws you into an insolvency state, because you will now have to divert monies from one repayment obligation to sort that problem. So for example, I need to pay my NMAX bill, I need to pay my Telos bill, I need to pay my credit card bill at the end of the month. And then all of a sudden, I have an emergency that takes away $700 from my monthly cash flow. What it means is I'm going to default on my Telos bill, I'm going to default on my NMAX bill, and I'm going to default on maybe one or two of my credit cards. The first month, everybody is going to look the other way. By the time you start getting to 60 days, you're getting an email or text message, depending on the institution, what's happening. By the time you get to 90 days, Telos will cut off your internet and all the Telos services that they're providing you. They'll cut it off. NMAX will shut you off. Your credit card company will start sending you and calling you. Oh, we're calling from the collections division. They've not done anything yet. By the time you get to the 100, 110, 120 days, they're moving you into full-blown collections, and they're sending a message to the credit score companies. And they will note it there that you have this loan or obligation with us, and you have been behind for 90 days. You have been behind for 60 days. You have been behind for 30 days. Immediately that hits your credit score, automatically you are downgraded. That's what happens. So for someone that is already in the below 650 range, the ability to access credit is already gone. And once you default, what is the definition of insolvency? If you are unable, by Canadian law, if you are unable to pay an obligation that is $1,000 or more, you can legally be declared insolvent. So if you are owing somebody more than $1,000 and they demand for it and you are not able to pay it, and they go to court, they can prove it that you are insolvent. What that means is that they declare you bankrupt. And then you now have to start all over again and build your credit. Before you can come out of bankruptcy, the law requires you to have repaired your credit and have been in that state of repair for, I believe it's 3 years now. And I can always confirm the number of years and send it to anyone. She can share it with all of you. But I think it's 3 years before you can say that you've actually come out of bankruptcy. Yes, you have repaired your credit, but when you walk into any institution, when they pull your credit history, they're going to see that you've been declared bankrupt once. And until you are minimum 3 years out of that, before they can start dealing with you, most institutions will tell you that if you've ever been declared bankrupt, we can't give you a loan until you are 5 years post-bankruptcy. That's their policy. Some will tell you it's 3 years, some will tell you it's 5 years. You can't access credits until 5 years outside of bankruptcy. If you have been declared bankrupt twice, you may never be able to access credit again in your life, because the lenders will just be, it's sentiments. If you come to my desk and I look at your history and I'm like, oh, you've been declared bankrupt twice. Are you going to make me the number 3 bankrupt company? So they will decline you. You may never be able to access credit again in your life. So those are some of the things about credit that we need to know, and we really need to protect our credit rating or credit score. And that's one of the reasons why you also find companies or banks or financial institutions encouraging you to protect your identity, because sometimes it is not even you that would have impacted your credit score. So it is very important to understand that. Now, what are the things that can impact our credit score? Before I go into that, so many people don't even know what their credit score is. Now, we have some providers that you pay for on a regular basis. Equifax, TransUnion, you pay for to get your credit score. You have some that are free. And I would encourage everybody to at least register and have an idea of where you sit from a credit score perspective. You don't have to check it every month. Once in 6 months, once in 3 months, just check it. Know where you are. So I've mentioned what you use credit for, emergency, pleasure, savings. And when I say savings, basically accessing credit to invest in a venture that generates money. That is, one of the functions of credit. So like I said, what are the things that impact your credit score as an individual? You have your payment history. That is the biggest one. So it's important that when you borrow money, you pay it back. That takes 35% of the matrix that is used to measure your credit score. The utilization, and that is the error that the person that advised Anemo made. You just heard of utilization. What utilization means is actually that when you have a revolving credit, the lenders expect that you don't use more than 30% of that revolving line. Once you start sitting above that, you're sitting at 70%, they see you as somebody that depends on credit to survive. So it's no longer using credit as you want, but more like credit to survive. So that is a risk. So that takes 30% of the matrix for measuring your credit score. Your credit history over time. So when you check your credit score, they will tell you sometimes that, oh, you've not built up enough history to have a score. So that takes 15%. The mix of your credit. Is it just credit cards that you have, or you have a mortgage, you have a car loan, you have credit cards, you have line of credit? That also helps. When your mix of credit is diversified, it helps your credit because it shows that you are credit worthy. That's why everybody can give you credit. So the mix is also very important. And then the final one is inquiries on your hard inquiries. So if in 1 year you have hard inquiries on your credit score, maybe like 5 times, what that suggests is that you've gone to 5 different institutions and they have all not been able to give you credit for one reason or the other. I may not know the reason, but why should you be hopping up and down and everybody's checking your credit score? So when you're having conversations and you're not sure yet, as much as possible, don't sign off for them to do a credit check on you. They can do a soft check, but never a hard pull, what we call a hard pull. So if I'm not sure that I need this credit, I will not allow the lender to pull my credit score on a hard pull basis. So it's important. And that's why they must always ask your permission before they pull. So if you check your credit rating and you see a hard pull, which you are not aware of, reach out. You always see the number of the company and all of that. You can reach out to either the credit rating company or that institution and find out, hey, why did you guys pull my credit? And if they're not giving you any credible answer, you can report them to the regulators that they pulled your credit without your consent, because it can impact your life. So those are the major things that can impact your credit. So I wouldn't want to go into the commercial space now, except anybody has specific questions in that area. But, I think just sharing these little tidbits with you, I'm sure you have questions, specific questions that may relate to everyday life, and that will help us a lot more. So if anybody has any questions, I would like to throw it open at this point.
Thank you very much. This was eye-opening. I mean, yes. Wow, credit. Yeah. Thank you so much, Kunle, for telling us all this amazing things. So we have some questions here. Someone wants to know, what are some of the investment options that one can use his credit card for?
I will not advise you to use your credit card for investments. And that's just because typically the interest rates that are on credit cards are so high that in this environment, it's almost impossible to recoup. So for example, I don't know where you're going to invest in Canada that you're going to get a return of 20% in a year. So if you use your credit card to buy that investment, you're already making a loss from day one. There are other forms of credit that you can use to invest, but definitely not a credit card.
Okay, so thank you. So one other question is, can one get a lower interest rate with a credit score of 780? And if so, how would the person go about it?
Okay, it's interesting that this individual knows that, okay, I have a 780 credit score, which is good. And that should give you the confidence to walk into your bank and tell them, number one, if you're looking at credit cards, ask them, what credit cards options do I have? And what are their different characteristics? You'll be surprised that every bank actually has credit cards that vary from some, the interest rate as low as 7%, to the average of 19%, and some in the 24% range. So when you ask those questions, you can migrate your credit card to the one that you think you are most comfortable with, particularly when you have that level of credit score. They're going to take it into consideration and they wouldn't want to lose you. That's number one. If you are looking at some other form of credit, then it's going to be difficult to say that this is the interest rate I want, except you have a competing interest rate. So what I would suggest at that point is you can have your existing bank, because they have access to your credit score, tell them that you want to negotiate your rates. Otherwise, you may go to another institution. Some people call it prostitution, but really, you're just looking for the best for yourself. But when you're also doing that, be careful that all the institutions are not pulling your credit. So you can have those conversations and let them know that I know my credit score. This is where I sit. If you pull it and you confirm, what are the terms that you can give me? So you have a pre-negotiation. They offer you a rate on the condition that, yes, if we check and this is where you sit, everything you've told us is like this, this is what we can give you. And they can actually give you that in writing or via email. That you meet all these conditions, yes, we can offer you this rate. And then you can take that to your existing bank and say, hey, this is what I'm getting from competition. If you're not ready to deal, I'm moving. Some institutions will even offer you additional incentive that, okay, that your mortgage, if I know that if you terminate it now, you're going to pay a fee, we will cover the cost of moving it to us. Just that you have a good credit score.
Wow. So if you have a good credit score, you can even
and you also do the calculations. okay, this is the cost to me, because you have, particularly if it's a closed mortgage,
Mm-hmm.
you terminate the mortgage because it's closed, you pay a fee.
Yeah.
Existing bank. They calculate all of that. And, some institutions will say, okay, yeah, we know you're currently paying 3.2%. We can offer you 2.9%. And on top of that, we've calculated your cost of moving it to us. It comes to additional, maybe $1,500. We'll pay that just to pull you in, because they feel that, oh, this person, number one, the credit score is good. Number two, the loan to value is very comfortable for them. Why not? If you
That,
ask, you never know.
that is good to know.
Ask questions.
Even if you've been in the mortgage for a year or 2 years, they'll be able to cover that cost and pull you in.
Yeah, it's negotiation. You can have those conversations with them, and they'll tell you what they can do.
Wow. It's good that we are having this, because then, oh my goodness, information is key in this part of the world. So someone is asking about the credit pool, and the question is talking about credit pool. Once a company pull your credit and your score has dropped, once you complain, can the scores be amended, or it stays that way? How long does the credit score move back after it has been pulled and it drops? Because I know it drops by 5. Does it go back up if you complain, or does it go back up after some time?
It depends on how the rating agency sees it. If you complain through the rating agency, and particularly where they have the insurance coverage for to protect your credit score, yes, they will go back once they confirm that it was an unauthorized pull, and that's the reason why your credit score dropped. Then they will reinstate you. But if you go through the regulator, the credit rating company is not going to reinstate you because you didn't go through them. But you can be compensated. Because what that means is, to avoid a lawsuit, the company that put your credit may decide to offset by paying you compensation, or you go to court and sue them that this is the loss that I incurred because you pulled my credits, you pulled my credit without my authorization. And this is an environment where the law works.
Mm-hmm.
So that's the way that plays out. But more often than not, really, one credit pool is not going to impact you. Typically what happens is they look at it over a period of time. And if in 3 months, 6 months, you've had like 4 or 5 credit pools, then that becomes a concern. Mm-hmm. Have one credit pool in 1 year, that's really nothing.
So what you are saying is the score doesn't go back up unless you have complained.
It goes back up because they pulled your credit, and maybe they pulled your credit multiple times. Mm-hmm. And really, that shouldn't happen, because you can't have 3, 4, 5 companies making mistakes pulling your credits. So if it's just one credit pool, that really won't impact your credits. It won't impact your credit score. It is the number of pools, mm-hmm. hits, we call it hits, on your account that actually makes your credit score drop.
Mm-hmm. Okay, so I'm sorry if I keep looking down, because the questions are coming on my phone and all that, so I have to look down.
No, that's fine.
Paraphrase it. So someone wants to know, if I have a credit card with a company and I decide to leave the bank. So I think this person is saying that they have their first bank in Canada, they have a credit card with them, but they want to leave the bank and move. What advice will you give them? Because they want to close all their accounts, but then they built their credit with this bank. Do they just cancel the credit card and move on, or keep the credit card? How does that work?
Your credit score is not tied to a bank.
Mm.
No.
Hey, my bank. Can you hear this?
Your credit score is not tied to your bank. Your credit score is from an external rating agency. Mm. So when you go to your credit score, when you pull your credit reports, they will see all the banks that you deal with and all the credits that you have with them. And for every credit card that you close, you will see it there. Oh, Animwa had this credit card with RBC, between this time and this time, and she has closed it, and they will note it there, closed at customer's instruction.
Mm-hmm.
So that shows you told them, I don't want again, not that they chased you away. It's not tied to your bank. When you're tired with one bank and you want to move to another bank, you can pay your credit card off and move on and tell them, please close my credit card. There's no.
Wow. And you still have your credit card? Because I think this question is very important. I'm glad the person asked, because I know that in the past, I had thought about it and people would tell me, oh, no, don't do it because your credit score is tied to that. And I think I have actually asked a bank rep and they said the same thing, that you built most of your credit with us. And if you go there.
No. Your credit score doesn't come from a bank.
Hey!
I mentioned to you, I give you examples in my presentation of some of the companies that actually provide credit scores. Equifax is one of them. TransUnion is another one. So everybody goes to that central pool to pull your credit score.
Mm-hmm.
So it's not tied. If you're tired with the bank, you can close your credit card and cut it. Give them instruction, please close my credit card, cut it, and move on to the next bank. As long as
Someone is asking, doesn't the age of the card affect your credit score? If you close your oldest card, does that not affect your credit score?
No. The age, what affects your credit score is your credit history.
Mm-hmm.
For how long you've been building credit.
Mm-hmm.
It is not the age of one single credit card. Each credit card will have its own age, but if you started having credit 20 years ago,
mm-hmm.
you closed that card and you open another card today, your history from 20 years ago is not going to disappear. Do you understand? So it doesn't. When we talk about your credit history or the age, it's about how long you have been accessing credit within the system, not how long you had this particular card.
Oh my goodness. Wow, this is interesting. Thank you so much. So there's another question. What is your take on having a single credit card against multiple credit cards? So I usually, when I open my mailbox, oh my goodness, Capital One, this come for this credit card come for that, come for this. So, and then when you go to Costco has a card, Superstore has a card, Walmart has a card. Everyone is giving you 2% for whatever it is. So what is your take on having a single credit card as opposed to having multiple credit cards?
Well, it can be positive and negative. So if, for example, you have 5 credit cards totaling $100,000, and the utilization of all those 5 is just $5,000. Mm-hmm. Utilization is 5%. That's positive. Where it becomes a negative is if you want to go for mortgage and they want to calculate your total debt service capability, TDSR. What they will do is they will load the calculation with the total amount of credit cards that you have and your ability to pay the interest, assuming that you draw everything to the maximum. So it can become a negative from that point. They're calculating and they're punishing you for money that you may never use. But the reality is, as long as you have it, you can decide to use it and they cannot stop you. So it depends. What I would suggest or what I would recommend is that don't have just one credit card, but also don't have too many. So it's left to you to decide how many you think is optimal for you.
Okay, my goodness, I have lots of questions. So someone is asking, as a married couple, what do you advise? Should we have separate credit cards or one credit card? And married couples. The man and the woman will be one. That's what the Bible says. So should we have
that is not a credit question. That is now. No, but really, it's a function of how you run your home. That's the bottom line.
Mm-hmm.
If you guys understand each other, you share information on the financial situation of the family and all of that. But really, and that's the expectation. You really don't have to hide things from your spouse or your partner. I really don't see why you can't. And, the reality is, particularly if your credit card is tied to a single account, then ultimately, both of you are tied to that account, although you may not be able to see your wife's statement, or you may not be able to see your husband's statement. But on the back end, the two credit cards are tied because they have different numbers. So the decision to either have a joint credit card account or individual credit card account is a family decision.
Oh.
And on what the family dynamics is. Where you will have concerns from the family lawyer's point of view. And in this part of the world, divorce is not strange. Tell you from day one. And that's when you start having questions like, okay, yeah, you guys can have a joint account, but bear in mind, these are the implications in the event of divorce and stuff like that. So
if you divorce, you split your credit score, or who takes the credit score? Since you have one credit card.
No, you will have two cards.
Oh, okay.
One account.
Oh.
So there's going to be a card in your name and there's going to be a card in the name of your husband, but both are tied to one single account. And of course, the minute the bank is aware that there's family issues, they will probably limit they will reduce the limits. They will start having conversations with you, guys, what I think about this, because we know that you no longer have that relationship. Same thing happens with mortgages and things like most mortgages are in joint names.
Oh, okay. So you can have one credit, so everyone will have their own card and build their own, but it's joined to one account. Okay, so someone wants to know if, I have a line of credit with a bank, but I've never used it. How would you advise to cancel it or to keep it?
If they're not charging you a fee, keep it. That's it's way better than a credit card, because that is actually money you can access as cash versus using your credit card to draw cash. They penalize you. So even if the interest rate on your credit card is 19%, if you use your credit card to pull cash from the ATM, they start charging you 21% or 22% or whatever it is on that cash component. So if that is just one of your credit exposure, and it's not like you're loaded with too many credit lines, keep it. That sounds like an emergency fund for you. And they're not charging you. Nobody's going to charge you interest on money that you're not using. So it's just available in the event that you need to use it.
Okay, so we have 3 more questions, and I hope we have some time for that. So how long can one rebuild their credit? If I go bankrupt, how long does it usually take one person to rebuild their credit?
Like I said, it will typically be a 3-year period before you can, someone that has gone into insolvency can come out of that bankruptcy state. It's not because you've not started paying, but the system will punish you. So it takes about that long. And I'll confirm exactly what the law says, but I think it's 3 years. I'll send you an email with the exact number. You can share it with the group. But I think it's 3 years before you can say that you've actually come out of bankruptcy.
So when you're bankrupt, you have to pay everything, or you start at fresh. You have to pay all the money that's
Okay.
your debt.
Now that's if we go into that, we won't live here. Now a
Oh,
bank person, really, what it means is the government has come in and said this person doesn't have the capacity to pay. So all the amounts that he's owing, we're going to suspend it and put it somewhere because he's bankrupt.
suspend, not clear.
Yeah, they just put it somewhere, and then you continue to live your life. But what happens is that you cannot access credit again. So you have to be living based on cash and start building all of that again, gradually. Once you are now stabilized, they can reintroduce those debts. So it's not like it's gone and that's it. But they leave you, they take you out of that debt burden for the period, and then you can start. Some people, they actually go into what we call a proposal. So you get an insolvency company to file a proposal on your behalf, and then they structure the repayments over time. That's very close to bankruptcy as well.
So, okay, last two questions. The last part one says, as a new immigrant, what do I do to build my credit? Just work in a bank, what do I do?
Well,
I have just landed in Canada. What do I do? How do I get my credit going?
Everyday living is actually adding to your credit score, because as you come in, nobody even has any history of you, which is why most likely some banks will tell you, well, we can give you just $500 worth of credit card, because they want to help you start building your credit. And then you get into tellers. You buy tellers for your home. That's also going into your buy kudu, whatever it is, go into contract. All those things starts impacting your credit, but it's at a very small stage. So by the time you are in the environment for 6 months, 1 year, you would have built up some credit at that point.
Mm-hmm.
Your score may be 750, but by the time we look at your total exposure, maybe it's just $2,000 of credit exposure that you have. When you come to me, I know that the only reason you are still sitting at that level of exposure is because you don't even have loans. So it's not just the credit score that determines what you can get. A lot of other things, but that's just one of the major parameters that we look at.
That is interesting. Thank you. So the last question that I have here is, how do you connect with a credit score agency to check your score? And how would you be sure that the link or the website is a genuine one?
Well, I don't know how I can tell you if it's a genuine, because we have hackers all around. But I can tell you that Credit Karma is a free credit score company. They provide that service. You get your credit score on a monthly basis. And I know that they're doing a good job.
Isn't that in the US? Is that in Canada as well?
Yeah, Credit Karma is in Canada. So you can actually subscribe and it's free. If you want to pay, you can go into Equifax or TransUnion and pay a monthly fee, and then you can check your credit score at any time. Borrowwell is another one that is free.
Borrowwell.
Yeah, that's the name of the credit score company. So those Credit Karma and Borrowwell are free. TransUnion and Equifax you pay for.
Thank you.
People go to Equifax and TransUnion is because those are the ones that the banks use.
Oh, okay. That I know. And then are you sure that like your credit rate will be the same throughout? Whatever credit
It's never the same. But they're usually in the same range. So you can have 690, 700, 701, 712, things like that, but usually in the same range.
Okay, thank you so much. That's all our questions. We are so happy that you were able to join us. I mean, we have conversations about this all the time. You go to your bank and you meet a specialist all the time. But then this has been eye-opening. Thank everyone. Oh, okay. We just got someone saying some banks also offer credit score checking for free. Okay, so you probably can just walk into your bank and say, I want to check my credit. And that's going to be a hard pull, right?
No, soft pull.
A soft pull. Yeah, so yeah, thank you so much, Mr. Kunle. We are so honored that you were able to come, because I know that, oh my goodness, this time, pandemic, people are losing their jobs. People can't pay their mortgage. You are so busy, but then you still have time to spare with us. And I always say that in this part of the world, if someone gives you their time, especially because most of us are paid by the hour, if someone gives you their time, that is money. And so we appreciate you that you gave us your time to come and speak to us and your knowledge to share with us, because sometimes you have to pay to get this. Thank you so much. African Connect appreciate. All Africans watching this appreciate, and we thank you so much for joining us. So everyone, we have funding again to support those who have been affected by COVID with Christmas hampers. And so I think we have the funding now. We are going to the market to buy the things. And so please watch on our page. If you're an African and if you live in Calgary and you've been impacted by COVID, we are going to give you a Christmas hamper so that at least, even if you're not spending Christmas with friends, you have food on the table. So please, if we put the details there, send us an email and we can deliver a Christmas hamper to you. Maybe probably by this week or next week, we'll have the details out. So thank you very much for joining us. And next month is going to be something amazing. Next month, I don't know, I won't tell you. Just keep on watching our page and then you get the details. And thank you very much, Mr. Kunle. And it was nice having you. See you again next month. Bye-bye.
Bye. Thank you.
Hi, everyone. Mr. Wale.
Hello.
How are we all doing? Ha!
We are doing great. How are you?
We are fine. The woman that went to space, Buki. This is your background. How do you guys do it? I want a background that I'm lying in money.
She's talking to you. Answer.
Sorry?
No. I was talking to her.
Buki,
Okay, so
I want a background that I'm lying in money. Like there's so much money at the background.
Don't worry, you will see that next time.
We have cut our hair.
How do I Mommy, you're not a young girl. 60 years.
Sissy of the second.
I'm just 15. I'll be 16 next year.
Happy birthday, ma. 15 years, 3 years pregnancy. You're looking good.
Thank you. Yeah, courtesy of your Baba now.